In today's video, we're going to be taking a look at the Philly Fed Manufacturing Index, also known as the Philadelphia Fed Survey, or even more formally, the Philadelphia Federal Reserve Bank's Manufacturing Business Outlook Survey. All right, bit of a mouthful there. This obviously focuses on the US manufacturing situation, and a lot of people think that the heyday of manufacturing in the United States is long over, but that really isn't the case. Contrary to popular belief, US manufacturing is still massive. The US is the second largest manufacturer behind China, or the third largest if you count EU as a whole. So let's take a deeper look. Hi, welcome to the Earn Invest Repeat show, and more specifically the Economic Data Simplified series that I bring to you every week. And in this series, I talk about data releases that we see coming out each and every month. Of course, we're going to be looking at these with a particular focus to trading and investing, but this should of course also be helpful to people who are just generally interested in economics and the economic situation in the world. Now, as I mentioned in the video, we are going to be talking in today's video about the Philly Fed Manufacturing Index, which focuses on the US manufacturing situation. But before we look at the Philly Fed Manufacturing Index, let's take a little bit of a deeper dive as to why manufacturing data is so important. Now, manufacturing makes up 11% of the US economy, and it contributes to nearly 8.5% of the non-farm payroll employment. Now, while manufacturing share of GDP is only around 11%, it generates demand for goods and services in other sectors that are not reflected in the manufacturing figures when considering GDP. And by the way, if you don't know what GDP is, check a look at this video right here to learn more about GDP. That is another video in this series. Now, according to a study conducted in 2013, manufacturing generated $2.1 trillion in GDP. However, when considering broader measures, that figure rose to approximately $6 trillion, nearly 3 times higher. A similar pattern also emerged in employment, where about 12 million individuals were directly employed in manufacturing in 2013, but the sector as a whole supported an additional 17 million people in indirect employment. So while manufacturing is not as crucial to the US economy as much as the services sector, it does still hold significant importance, and its data provides valuable insights into the overall health of the economy. Now, this is where the Philly Fed Survey comes in. The Philly Fed Survey is a monthly survey sent to businesses, and the responses assist in assessing the manufacturing conditions throughout the United States. Participation in the survey is voluntary, and the participants are asked various questions regarding changes in employment, orders, and of course prices. Consequently, the survey provides insights into the sector's performance and identifies potential issues related to, of course, inflation or employment. In addition to current conditions, the survey also includes inquiries about participants' expectations for the next 6 months, offering a short-term forecast of manufacturing conditions. So what do the data results mean when they come out? Okay, we've got one coming out today, and if the data release comes in above 0, okay, in the Philadelphia Fed Survey, it indicates positive growth in manufacturing, which is likely to contribute to higher overall economic growth. However, conversely, a reading below 0 suggests contraction in manufacturing. You might hear that word a lot, and that could lead, of course, to lower economic growth. It is important to note that the survey only covers specific areas in northeastern states in the United States, and it collects responses from around 250 businesses, which is representing really a relatively small number of US manufacturing. Therefore, of course, it doesn't carry the same level of significance as some other manufacturing data releases. However, it holds value as one of the earliest manufacturing data releases, as it is published during the same month rather than reporting on the previous month. This timing allows it to provide insights into potential developments and serve as an early warning sign for emerging issues. It can then, of course, provide indications and a preview of what subsequent releases may eventually reveal. Now, the IBD Economic Optimism Index is also used as an early indication, so I will be doing a video on this in this series for you next week. That will be the next one coming. So keep your eyes peeled. Then when I do release that video next week, I will also be linking that here in the top right corner of your screen. But for now, if you haven't seen any of the other videos of this series, or you want to learn more about economic data, of course, you can also click this link here that will direct you straight to the playlist itself. Also, if you are finding this particular video or series helpful to you, please don't forget to hit the thumbs up button and of course subscribe to the channel so you don't miss out on any other videos in this series, as well as other content that I produce throughout the week. The more interactions that I get like this, like liking the video, subscribing, sharing, commenting, etc., that I get from you all, not only is it of course vastly appreciated from my point of view, but it also will help reach more people's screens to, of course, expand its reach and allow other traders and investors alike, especially budding traders and investors, people that are getting new to the space, or people that are just a little bit confused, they're a little bit lost when it comes to economic data. It will give them the opportunity and benefit by having this reach their screens. So on that one, ladies and gentlemen, hope you've enjoyed this video, and I'll catch you guys on the next one.